We're back to the Neil Haley Show, and I love to talk to entrepreneur mindset people. And my guest today is Stephen John. He's the CEO of HCG Holdings. How are you, Stephen? Thanks for stopping by.
Doing great. Thanks for having me.
Absolutely. Let's kind of talk about specifically your entrepreneurial journey. How did that start? Was it always in your blood?
Yeah, as a matter of fact, right out of college, my dad was taking an early retirement from the Bell telephone companies, the breakup of AT&T. And he and I started a phone installation company, which my brother still runs today. That would have been 1981. So I kind of got the bug then and have been pretty much a serial entrepreneur ever since. I've done a couple of stints in corporate America, but for the most part, stayed on the entrepreneurial path.
What is your experience in corporate world? What did you do?
So I was in the cable industry for a couple of stints, one with a small privately owned cable company called Helicon. We got acquired by Charter Communications, which is now the second largest cable company. Spectrum was a Paul Allen company at the time. And then most recently, I was a CEO of a public company called Westel, based in Chicago.
Okay. Well, great. And so let's talk about specifically enough your entrepreneur mindset, your businesses right now. So your main one's HCG Holdings. How did you come up with that idea for this business?
Yeah, so when you spend a lot of your career buying and selling companies, you always have these periods in between where you may have non-competes or some type of contractual restrictions on what you can do. So I created HCG as a holding company to either do investments, private investments, or to be able to do consulting projects several years ago. And then when I left my most recent kind of job as CEO of Westel, I just decided to really concentrate on advisory work, really helping early to mid-stage companies that are looking to try to grow through scale, grow through acquisition, maybe raise capital, doing advisory. And then we partner with other entities from time to time, depending on, what industry it is or what expertise we may need to bring in, to bring more resources to bear. Either if we're representing a client to sell their company, helping someone, identify targets to buy and or raise capital. So HCG is kind of this holding company that does various things.
So when you're holding company in a way, so they're looking at the journey, right? From, hey, you have a company, your goal is to sell the company at one point in time. Is that the kind of company you're looking for? Is one, hey, they're in a specific phase and they're raising capital stuff, but they have a goal at one point to sell. Is that?
Yeah, so we do a couple of things. We help, entrepreneurs, typically companies that were started in a family, they've gotten to a certain size, maybe second or third generation, they're looking for a way to exit and monetize that for their family. Other cases, we find startups or early stage companies that are looking either to raise capital or to build a capital strategy or build a growth strategy. Through 40 years of being an entrepreneur and a C-level executive and some larger organizations, you build, fairly significant, and this will age me, Rolodex. And so we use those relationships and contacts to help companies either, with growth strategies, exit strategies, or acquisition strategies.
So how difficult is it to sell your business if you're looking at it?
To maximize it, it's not easy. Some people try to go it alone, which is not necessarily the wrong thing to do. But if you really want to maximize the valuation, in a lot of cases, an advisor can help by bringing both potential financial buyers and or strategic buyers, and really work to help that, the ownership really maximize the valuation of the business and position it in a way that gives them the best exit.
And sometimes you look at some of the startups, they're looking to raise capital first, right? And the goal that they're, let's say a certain company, like a tech company, that they want to be out in 3 years. And then you're advising them in that process too, right? Because you see a lot of these, startups that first need to raise capital, right? To get to the level they are so they can be sellable, right?
That's correct. Yes. That's exactly what we do. So, we'll help them decide if, where are they in their growth trajectory? What type of capital is going to be the most attractive for them? Is it going to be, angel capital, venture capital? Is it more traditional equity? Could they do debt? There's many ways to raise capital. And I learned the hard way through my entrepreneurial journey that, that how you raise capital, not how much you raise, but how you raise it, where it comes from, can be, the most important decision you make, because you're trying to hang on to as much equity as you can as an owner. And sometimes, someone standing there with a check in their hand, it looks really, really attractive, but it might not be the best option for you.
And you're able to consult in that way, so you don't make the wrong decision. Because when you sell your company or somebody is raised capital, they can gain so much control of your company, it ends up being worthless to you, and it's really not your business anymore. It's theirs.
That's correct. That's exactly right.
And where do people, like, this is a tip for people, because people that listen to my show are entrepreneurs, business owners, are different people. They're always looking to raise money. Where do people find angel investors or financiers? Is it challenging? Is it a difficult thing? What are the recommendations to find people that are looking to invest in things?
Obviously where most people start is friends and family, reaching out to their network. And then there are angel organizations all over the United States. Every major city has some type of an angel organization that look to help. Maybe it's an incubator that has angels attached to it that are looking to help really early stage companies. The earliest early stage companies are typically going to take friends and family or their own money to get that, to get started, to get at least a business plan and a customer and something that's tangible that is investable. Then they can go the angel route, or if it's an accelerated business, they can, look to venture if it's got, large enough growth potential. If it's a big B2C type of an opportunity where there's really massive growth potential, they can look to the venture world. But typically it's going to be in the angel world, and those angels are not that hard to identify. There's usually organizations within every geography that are really looking for those early stage investments.
Define for me the difference between, or describe the difference between an angel investor and a venture capitalist. What's the difference in getting venture capital money versus angel investor money?
Yeah, angels are typically individuals, high net worth individuals. They're going to take a small piece. Angels won't take the whole piece of funding. Sometimes they will if they really like the opportunity, but it's normally going to be an individual or a small group of individuals that'll be angel investors. Whereas a venture fund is someone that, it's an actual fund. They've gone out and raised capital for the sole purpose of investing in early stage companies. And they look at things a whole lot differently, right? They're looking for those unicorns. And the first time I got introduced to the venture world was the very first time I tried to raise. And the guy told me a really interesting thing. He said, if you were asked, we were looking for 5 million. He says, if you were asking for 50 million, we would fund you. And I said, that doesn't make any sense to me. And he says, well, we look at it differently. As a venture fund, I've got $500 million. I've got to take 10, $50 million positions, because I know statistically, 3 of those are going to go completely busted. I'm going to lose everything I've got. 3 to 5 of those are going to be moderately successful. I may get my money out with a small return, or I may lose a little bit of money. I'm looking for that 1 in 10 unicorn that's going to give me a 20 or 30 or 40x return. If you're the unicorn and I put 5 million into you, and I put the rest of my 500 million other places, I don't get the right return. It kind of blew my mind. It told me I never wanted to invest in a venture fund. That's a really high.
Right, because it's a crapshoot. It's almost like for the individual, the venture fund is like almost like for the individual when it comes to a high rate return type of investment with lots of risk. It almost seems the same. So you're telling me the people who invest in as a venture capitalist fund, a venture fund, you're going to see specifically enough that they're trusting whoever's doing that they're going to be able to find the right company. So that's why they're so difficult to get venture capital, to be part of a venture capital fund, meaning
Yeah.
for them because they're really under a lot of pressure if they don't make that fund any money, right?
Yeah, and they have really tight time frames when they need to get in and out of an investment thing. It's a formula. It's very formula driven, but that's why they hire, some of the brightest and smartest minds in the particular industries they're going to invest in, because they've got to look at, they've got to kiss a lot of babies to find the right ones that are really going to fit into their model. And, hopefully one of those 10, and sometimes 2 of the 10 or 3 of the 10 go crazy. And then, the returns are ridiculous at that
So it's almost like an individual person, a hedge fund, how they're, as a hedge fund person, their job for that individual investor is kind of like a business, a venture capitalist person for a fund for a business. Is that almost the kind of situation where it's a high risk, high return type of environment?
Yeah.
And
whereas private equity looks to invest in existing businesses with existing cash flow, and they're looking for a different return. They're looking to a 3 to 5x return. They're much more conservative. They're not going to get into really early stage. So the difference between venture and early stage, lower returns on the private equity, but much more predictable because they're investing in
who
existing.
invests in private equity funds? Who usually invests in those? That's more of a hedge fund thing, or is that?
Yeah, hedge funds, retirement funds, individuals,
Okay.
things like that.
Almost going into like the same stuff that people that go the things like real estate, like
they got a little bit longer time horizons, a little less risk adverse.
The rate is not as high, but it's better than the stock market, right? That or a mutual fund, you're going to get a higher. But I see what the thing is. So what do you recommend businesses that are looking at getting investments to look at? What do they need to look at in their company? What things are especially if we're looking at a startup company, what should a startup company think about before looking at all these types of investments? What things?
Yeah, I mean, there's so many things. If it's a real early stage, they'd really have to have a very fully baked go-to-market strategy. Hopefully have some beta customers, some proof of concept at least on their product. They really need to start to be thinking about what the structure is going to look like long-term. Do they have the right controls in place, the right, strategy for structure? Because very seldom do you see, the guy with the business idea, with the technical strategy that comes up with the idea, being the CEO long-term, because it's different types of skill sets. Sometimes it works that way, but not always. And so you've got to really be thinking about each step of that growth trajectory. What are the steps I'm going to need to take to prepare my business to go to the next level? For every Google, there's 10,000 other businesses that don't see anything near that type of a growth rate. So businesses that are just in normal day-to-day, they haven't come up with a unicorn idea, but they've got a good business execution strategy, a unique product offering. They need to think, how do I get to my first $1 million in revenue? How do I get from $1 million to 10 million, to 100 million? Because each of those steps takes some pretty major strategic moves to get there.
It's so interesting to learn about that stuff, Stephen. And this is intriguing. Definitely want to have you back on and talk about things again. These are just things to think about. So if people were interested in HCG Holdings, what do they need to do to contact you, Stephen, to talk to you, especially if they're like, man, this guy has knowledge, as I see you have knowledge. I want to not have to think about these things to get my startup funding, or I just inherited a business and I want to sell it quickly and get the best rate of return. So you have multiple ways that people could utilize your company. Where can they go?
They can come find me on LinkedIn, or just come directly to my HCG email address, or through our website. So,
and is that hcholdings.com?
HCG LLC, hcgholdingsllc.com.
Okay. Fantastic. Stephen, it's great information, man. It's stuff that people wish they can have, especially because there are people, and I don't know if you know this, in this industry, you're looking at specific big ones, but there's so many people have this dream They want to become a $10 million company, or maybe become a $100 million company. They want people to invest. That's why Shark Tank's on there, right? Because
Yep.
everyone has that Shark Tank dream. Well, you're taking it to a serious level by the experience that you've been able to provide today. So thanks for stopping by.
Absolutely. Thanks for having me.
All right, you're listening and watching the Neil Haley Show, and we'll be back in just a moment.